Electric vehicles have seen exponential growth in numbers, starting from a measly 20,000 electric vehicles in 2010 to more than 7 million in 2019. That is a 350 times increase in electric vehicles in the past 9 years alone. The International Energy Agency projects that EVs are most likely to keep growing at a staggering rate, from about 7 million in 2019 to just below 250 million in 2030. This is a market that has great untapped potential. Therefore, electric vehicles is a topic that you definitely shouldn't ignore. And NIO is a company that you should definitely look out for. Hey guys, welcome back to The Wealth Professor, the community for informed people looking to build long-lasting wealth. Make sure to subscribe for our weekly videos where we cover the future of business and finance. So, why should you care about NIO? From just another car company based in Shenzhen, NIO has made waves in the electric vehicle industry for its cutting-edge technology and how it patterns itself after Tesla, which is a good thing. It's not just another EV company copying the Tesla playbook. Well, in a way it is, but it's positioning itself as a brand that resonates to its target demographic. It's positioning itself as a lifestyle brand, one akin to Apple and WeWork. Now in this video, we'll be discussing the history of NIO, their fundamentals, how they're changing the EV game around the world, and why many are bullish on the stock and the company as a whole. So let's get to it. I'll be giving you a brief history lesson of where they began, then later we'll show you how NIO is positioning itself in the market today, and how it stands versus the many colossal players like Tesla, BMW, the Volkswagen Group, and other Chinese contenders. We'll also be taking a quick peek into how geopolitics is shaping the future of the stock, especially with the Biden administration, historically speaking. We'll follow up on the Obama administration's aggressive push towards EV technology. And of course, we're going to talk about whether or not NIO is a good buy, if NIO is a good investment for you. So what is NIO exactly? NIO is a privately held Chinese-based company founded in 2014 that's owned by the Chinese CEO and entrepreneur William Li Bin. William Li has actually made automotive ventures in the past, starting with BitAuto around the early 2000s, and then Next EV, which was then rebranded to the NIO we know today. Now, while NIO is a private company, the Chinese government actually has a 24% stake in NIO, but that's out of the scope of this video. After all, prominent Chinese companies have historically been funded in part or in whole by the Chinese government. But make no mistake, NIO is still a private company only invested in by Beijing. So NIO actually has operations all around the world, with Shanghai being their global headquarters, Beijing, Oxford and Korea being their R&D hub, Italy being their design center, California being their center for American operations, as well as an advanced technology development hub. You can evidently see that they really do focus on their research centers and on their people. NIO isn't your typical car brand like GM, BYD, Toyota, VW. They're attempting to take Tesla head on. Of course, they're not as big and known as Tesla, or as prominent as BYD is in the Chinese market, but beyond Tesla, they're trying to build a lifestyle brand, similar to how Apple built a lifestyle of its own, and an ecosystem that accompanies it. Other companies that are known to build lifestyle brands as well include Xiaomi and even WeWork. These are companies that initially made phones, tech, and in WeWork's case, living spaces, but then branched out towards something more focused on building a reputable brand. NIO is essentially doing the same, as they're trying to captivate the younger market into framing NIO as an exclusive and upscale brand, not just as a mass market brand or just another car brand. NIO is also quite a good prospect when it comes to the technical side. They're paving the road towards mass market battery swapping technology, which is a technology that the likes of Tesla shrugged off but is actually a practical daily benefit when it comes to the usability and longevity of an electric vehicle. Let's talk a bit about NIO Lifestyle. If you scroll through their website, you can see that the lifestyle section focuses on merchandise, gathering spaces, scooters, apparel. So they're really projecting a unified image that says, hey, NIO is more than just a car company. We're a lifestyle brand, and you as our customer or prospect customer are in this exclusive club. By going all NIO, you're awesome like that. And I guess that sort of reflects their service-oriented business model, even stemming back from one of their CEO's original projects of building a third-party in-vehicle digital assistant several years back. Now, the technology. What has been seen as an afterthought by the likes of Tesla, NIO sees as an advantage. Battery swapping technology is a technology that NIO recently announced it will be integrating into most of its fleet of vehicles. It's a great way to lengthen the life of an EV and provide more convenience to the end user. Not only does it make going from almost out of charge to a fully charged battery just take about 5 minutes versus what would typically take 30 minutes, but it also reduces the wear on batteries as fast charging or supercharging actually wears out your battery a lot faster, effectively making the life of your vehicle a lot shorter than what it would normally be. Battery swapping actually has the potential to significantly decrease the upfront cost of the car to the end user. It might even be enough to make electric vehicles more appealing than getting an internal combustion engine vehicle, as the lower price gives NIO the responsibility to replace the batteries when they reach their end of life. Battery swapping actually has the potential to significantly decrease the upfront cost of the car to the end user. It might even be enough to make electric vehicles more appealing than getting an internal combustion engine, as the lower price gives NIO the responsibility to replace the batteries when they reach their end of life. Battery swapping technology actually has the potential to reduce a lot of e-waste because of NIO recycling their batteries and potentially reusing the old batteries to make new batteries. So battery as a service, as one of NIO's niches, makes the user's life more convenient by only needing to pay a service to replace the NIO batteries for a potentially low cost when it's out of charge or when it reaches the end of its life without really much hassle. Battery as a service intertwined with their lifestyle brand focus essentially makes NIO more than just a car maker and more like a service provider, similar to how apps and subscription services work today. Now moving on to politics, the new Biden administration has continued to advance the Obama-era policies on electric vehicle adoption. The Biden administration has actually advocated for US-made EVs and for the US to transition a significant amount of their total market share of internal combustion engines or ICE vehicles to electric or alternative energy vehicles. This includes federal vehicles that could potentially in the future become electric. China, however, is still definitely leading the pack when it comes to EV adoption and production, with the research from MIT projecting that China, from having 93% of its total vehicle sales being composed of ICE vehicles in 2020, will shrink to just 63% in 2030. That's a major leap, with electric vehicle sales starting from a baseline 1.6 million in 2020 to a projected 11.2 million in 2030. That's more than a tenfold leap in just 10 years. Of course, subsidies are a huge factor in electric vehicle adoption today. But with NIO's battery swapping technology and battery as a service business model, electric vehicles have the potential to significantly undercut the price of ICE vehicles upfront, assuming that they successfully implement the battery as a service model. Now let's move on to the economics. The great dip of NIO. In terms of stock, what happened to NIO in the first part of 2020 around January was that there was a huge downturn for the stock. It went from $53 to a low of $35. Now, this has investors wary of the stock, but in actuality, this is nothing to be worried about, as this is just a result of the global trend of crashing EV stock prices, not because of their inherent value, but because of externally influenced factors that will probably be short-lived. One of the culprits for global EV stocks to dip is led by global chip shortages, which is, of course, you guessed it, due to the coronavirus outbreak, which has massively affected the supply chain of electronic devices, especially silicon all around the world. All manufacturers were affected by this plunge, not only NIO. Even Tesla took a major hit to its stock price. But nonetheless, as supply does get better, and it will soon enough, the stock price will come back climbing to where it was before, and then some. Now, let's talk about competition. Of course, NIO is not the only player in town. There's also the likes of BYD, BAIC, SAIC, and these other Chinese players. Not to mention, also we have Tesla, Faraday Future, even BMW, GM, and Volkswagen are coming in the game. But with the likes of NIO, they're still the pioneers and on the bleeding edge of these new technologies. They have a competitive advantage with both technology and the brand. While their name is not as recognizable as Tesla is today, NIO was only founded in 2014 and yet their stock is already performing similar to Tesla's. They also have an admirable roadmap, one that their competitors need to look out for, and I personally believe that NIO isn't just another car company. They have something definitely going for them, whether that be the projection of their brand, their technology, their founder, or just the timing. You know, as they say, timing is everything in the game. So as Tesla's the first to succeed, well, in actuality, it's not always about being the first, it's also about many other factors such as the incentives in place, the price, the technology, mass acceptance, and a myriad of other things that could make or break a company. The EV market is still relatively small, but it has a huge amount of room to grow. And with NIO's battery as a service, assuming that they actually fully implement this, there is a good chance that the cost of EVs will plummet further and therefore will be adopted further. Now let's talk about the future. NIO is in essence at an early stage in life versus more established players in the market. But take that as a good thing. They have a vision. They have to some extent execution. They're experimenting with bleeding edge technology and they take into account the end user. What they think, what are their pain points, what would drive them to buy an electric vehicle. And if people don't opt to buy their vehicles yet, at the very least, they're gunning on making people have some sort of brand recall and mass acceptance of their brand. NIO has definitely a long way to go, but it is something you as an investor or just a common person should 100% keep your eyes on. I just want to reiterate that with NIO's battery as a service feature, they're pretty much at the forefront of this technology. If you're looking for an investment that fits your niche, that can possibly dominate the automotive scene, all I can say is that this is such a wonderful alternative versus Tesla's fast charging. I could liken it to the AC versus DC battle, fast charging versus battery swap. So these are just some of the reasons why we think NIO has the potential to reach 10x in growth, to grow 10 times their size, and maybe even grow beyond 10x. They're positioning themselves as a major player in the Chinese EV market, and they're growing at an astounding rate, not just in China, but around the world. They're trying to gain a foothold in the US, and they're trying to ride this once-in-a-lifetime wave of EV adoption and tech innovation. So if you learned something new from this video, click on the like button below, leave a comment, and make sure to subscribe to The Wealth Professor for more content like this in the future. And we'll see you guys in the next video.